All right, let's dive right in. If you've been watching the market lately, it probably feels like complete and utter chaos, right? Well, believe it or not, underneath all that craziness, there's actually a very clear story playing out. So today, we're going to pull back the curtain and figure out what is really going on.
The general feeling out there right now is just ugly. I'm not talking about a little pullback. For a huge number of stocks, it has been absolute carnage. We're seeing these massive double-digit drops in a single day. It feels less like an investment market and a lot more like a battlefield.
And that brings us to the real mystery here. It's not just that stocks are falling, that happens. The really confusing part, the part that doesn't make any sense, is why. Why are fantastic companies reporting great earnings, getting just punished? It doesn't add up.
And look, this isn't just a one-off thing. Take Palantir. They come out with killer earnings, and boom, the stock gets hammered, down over 10%. Same exact story with AMD. Great numbers, and what happens? It gets punished with a huge gap down. Even a behemoth like Google puts up solid numbers and gets thrown around like a rag doll. The theme is crystal clear. Good news isn't just being ignored, it's actively being sold. So to crack this case, our investigation has to start with the big guys, the two major market indexes, the S&P 500 and the Nasdaq 100. And right away, we find our first big clue. They are telling two completely different, contradictory stories. It's truly a tale of two markets.
And this really lays out the whole conflict perfectly. On one hand, you've got the S&P 500. Yeah, it's choppy, it's frustrating, but it's holding. Buyers are stepping in right where they need to, right around that key 50-day moving average. The breakdown just isn't confirmed. But then you look over at the Nasdaq, and whoa, it's a totally different picture. It's not a standoff, it's a breakdown. It is sliced right through key support and is trading well below its 50-day. The downtrend here is clear as day.
Now, you might be wondering, what's the big deal with this 50-day SMA? Well, it's a really important trend indicator for traders. Think of it like a line in the sand for the medium trend. When a stock, or in this case an entire index, falls below it and stays there, it's seen as a major sign of weakness. And that's exactly what's flashing red on the Nasdaq, but not on the S&P.
So, how is that possible? How can the broad S&P 500 be hanging on for dear life while the tech-heavy Nasdaq is just falling apart? Well, this is where we get our big revelation. The answer isn't in the indexes themselves, it's what's happening under the hood. We are witnessing a massive and kind of secretive shift in the market.
And just look at this chart. This tells the entire story in one glance. You've got sectors like energy just absolutely ripping higher, up 5% or more in a week. You've got defensive stuff like consumer staples doing great too. But then you look at the other end of the spectrum, software down a toxic 8%. You see, this isn't a market moving in one direction. It's a market being literally torn in two.
This right here is the aha moment. It's a money shift. You can see exactly where the money is flowing out of and where it's flowing into. It is fleeing the high-growth, high-tech areas like software, semis, and the Mag 7 stocks. And where's it going? It's pouring into these more defensive, value-oriented sectors like energy, materials, financials, the whole nine yards.
So here's the verdict. What feels like a market crash for so many people isn't actually a crash in the traditional sense. It's a massive hidden rotation. Big money is selling growth in tech, and they're buying value. And this explains everything, doesn't it? The S&P 500 is holding up because its value components are getting bought, which is canceling out the damage in tech. But the Nasdaq, it's almost pure tech and growth, so it's just feeling all of the pain with none of the gain.
Okay, so now that we've solved the mystery of what's happening, let's look at the consequences for the who. How is this great rotation actually affecting the huge tech stocks that everybody knows, follows, and probably owns? Well, as you can probably guess, it's been a really wild week.
Let's start with Microsoft. The stock itself, just looking at its chart, looks pretty bearish. It looks like it wants to head lower. But, and this is a big but, the broader software sector has been beaten down so badly that it might be due for a big relief rally. So Microsoft is stuck, caught in this tug of war. Does the weak stock drag the sector down, or does a potential sector bounce lift the stock up? It is at a critical crossroads. And then you've got Google, which is just the perfect picture of this chaos. After its earnings report, the stock first plunged straight down. Then, out of nowhere, it reversed and screamed all the way back up to new all-time highs. And after all that drama, it ended up pretty much where it started. That kind of insane volatility just shows you how much confusion and indecision there is in tech right now.
And AMD, man, AMD is the poster child for our punishment theme. Once again, great numbers, just didn't matter. The stock gapped down hard, crashing right through some really important support levels. And once that happened, it triggered all sorts of automated selling, pushing it right down into a very bearish chart pattern. It's the classic case of a good company getting trapped in a really bad neighborhood.
Okay, so we figured out what's happening and why. But the million-dollar question for everyone, of course, is what happens next? Where do we go from here? To figure that out, we've got to look at a few key clues that are probably going to decide the market's next big move.
Here are the 4 big things that I'm keeping my eyes on. First up, Amazon earnings. It's the last of the tech titans to report. Is it going to be the hero that saves the market or the final nail in tech's coffin? Second, the financial sector. It's been a source of strength, but if it starts to roll over, it could drag the whole S&P down with it. Third, that software sector we talked about. It's been absolutely crushed. Is it so oversold that it's due for a big snapback bounce? And finally, just the overall appetite for risk. Right now, it's clear investors are running from risk, which confirms this whole rotation story. We need to see if that changes.
So as we wrap this up, we're left with this one giant question. We've uncovered the secret rotation, this tale of 2 markets playing out right under our noses. But is this just a healthy reset? A normal changing of the guard where leadership passes from one part of the market to another? Or are we seeing the first tremors of a much bigger earthquake to come? That is the question on everyone's mind.